traders from across the globe, and welcome to the 1252nd edition of Short-Term Trading Live with Oscar Carboni. Traders, these nightly videos are geared to help teach you the art of technical analysis, how to read the charts, and how to apply that information and use it for the markets moving forward. Each night when I put out these videos, there are many lessons in those for you to learn, especially when it comes to the art of technical analysis. So pay attention to this video and go look at the other 1251 if you'd like to catch up. Traders, what do we have on the board? First of all, let me say this. It has been extremely volatile out there. You need to have your stops in. You absolutely need to know that this is a very risky game. You cannot trade this game without extra risk capital, and make sure you put your stops in first. This is not suitable for all traders. You need to know that. And, of course, this is simply my opinion, but if you can find someone who does YouTube videos with a better chart opinion than mine, I'll hire him. You let me know about him. All right, so what's up next? What do we have on the board? We're going to start this day off with a red Omni in U.S. indices. We will start this day off with a red Omni. ES, NASDAQ, Dow, Tranny, the usual suspects. I am not guaranteeing the entire day will go down because our market has been like this lately. We're in a very big booming bull market which had a down day, right? A couple of down days. That does not make it a bear market by any means. So we're going to start off selling, but this could very easily turn around and turn into a green Omni by the end of the day. I would say this, though, you'd have to have a real decent dip before the buyers will come back in. Let's play that as it happens. So I've got some interesting things on the board, some topics I'd like to discuss with you. But as you know, I like to get the news out with my first video of the week. Right? All weekend I spend reading the news, reading the regs that are out there. And you know me, I go from Wall Street Journal to, I'll read the Post. I go from everything in between to see what the street thinks. And here's what I found extremely interesting. Two things that should let you know there is no way that red arrow will last very long, even if it works for a day. And here's what's going on. The most important things I read in the newspaper tie into many things I've told you about or something I've mentioned repeatedly in my videos, and this is it. I have been telling you that they are getting ready to relax standards, the lending standards, so that if you're a bank and you want to lend or sell your mortgage to Fannie or Freddie, you can do that. Now, we both know that they were taken offline by the federal government and they stopped guaranteeing loans. And in fact, both Fannie and Freddie forced many banks to buy back their mortgages at high-end prices, which hurt those banks badly. All of that has been put to rest. The government has made billions of dollars on the bailout, and they are now putting Fannie and Freddie back online. And here's what this means for us. The new guidelines, which should take effect on December 1st, which I guess yesterday or today for tomorrow, they'll be in effect, are basically new guidelines that relax the lending standards for banks who will lend loans to people like you and I. They will relax these lending standards so that millions and millions of people who are unqualified right now will fit within the qualifying guidelines to get themselves a loan. Why? Because then you can take it and sell it to Freddie or Fannie. They will take it now. It's back in business. What does that mean for us? It continues. The new rules will also relax exactly what banks will have to pay in fees and penalties when, get this, when making mistakes on the applications that they approve loans for and then sell off to Freddie and Fannie. In other words, the party's back on, right? The Fed wants the party back on. The government wants the party back on. And now banks are going to be able to lend money to you and I for any mortgage we want because they can sell them off whether we give them a crappy application or not. That is very interesting. Now, continuing to read, and this came out of the Wall Street Journal, by the way, there was a gentleman from Wells Fargo. I read a bunch of different articles, but the guy from Wells Fargo really seemed to have this together. And he said, with the new agreement coming online December 1st, the lending rules, I have been told with absolute confidence, these are his words, with absolute confidence that most lenders will be lifting almost all of their overlays, which are simply underwriting rules which made it stricter and harder to get mortgages, removed. That starts yesterday, today, however you want to call that, for tomorrow. Then there's a couple of other banks that decided, let's see what would happen. Bank of America, BOA, right? They're going to sit back and not relax rules right away just to see if there's some sort of a rollback and the government comes back after you again if you're a bank and you lent out bad loans. So U.S. Bank and B of A are not going to participate, but just about every other bank said they're going to relax the rules immediately. Get your real estate now, baby. Get it, because it is going to go through the roof. So you've got that. Then something like this, I'm reading article after article. Do you know that Hollywood, California, has 134,900 jobs reported for October? That is like the best in 10 years. Do you know that Vegas has a commercial on TV and the radio right now in Vegas? Over 650 unfilled jobs at CCSD. That is the school system here in Clark County school system. Do you believe the school district? Do you believe all these job openings? I have read articles that there are tens of thousands of unfilled jobs across this nation right now. I am not out there looking to see if that's true. I'm telling you what I'm reading out of the papers. If that's the case, here's something else. Best Buy on Friday was so inundated with buyers at their websites that they went down several times. They never expected to have such a rebound. People are even spending money at Best Buy. Are you kidding me? We've been using Best Buy recently. You go on the internet, you see something you like, you go to Best Buy, you ask 1,000 questions, you don't buy a damn thing. You go back to the internet and you buy it from the mail, right? That's what we've used Best Buy for the last couple of years. Then we're getting destroyed. They're even spending money at Best Buy. The crude's been going down. So I'm telling you right now, this is a red arrow, but this is absolutely not the beginning of Armageddon. It's going to be a fast red arrow, in my opinion, based on the things I'm telling you about now. The real estate's slightly longer term. It'll take a little time to pick up, but that is going to be big. Another thing to propel our markets to even new highs. So that's what I wanted to talk about. As far as the news is concerned, there's lots of others, but that was most important in my stack of reading. What's on the board? OMNI calls for a short breather, a pullback day, maybe a day and a half, maybe 2 days. We'll see. This is a big booming market, so that's not lasting very long, but we will unequivocally start this day off with selling the S&P E-mini. The NASDAQ, we'll start selling there. We'll see how the day ends up. Again, this could go green. Don't hold me to red all day. The dollar index. Traders, you've seen an insane amount of volatility in the metals and some grains in the markets themselves. Why? I will tell you why. You haven't been paying attention if you don't know why, because it's staring you right in your face if you're an analyst. The dollar index is why. The dollar index is king right now, and here's what I've got to say. The dollar index, one small step for the dollar equals one giant leap in many markets. And that's what you've seen today. The dollar had a 43-point drop from its settlement to where it settled today. So from the close to today's close, a 43-point drop. The last time we had a 43-point drop was not until back around October 15th. And you'll see that we had a massive day in the S&P on the day that the dollar dropped more than 43 points. Now, we've had a steady, stable dollar for weeks and weeks, months on end. Only on days where the dollar has a decent drop do these markets gyrate like you've seen. So I am telling you, there's nothing wrong out there. Keep your eye on the dollar. If the dollar stabilizes tomorrow and goes right back up, everything calms right down. It is really based on dollars. They're out there trading everything as if dollars will never stop going up. And if they come down slightly, people go berserk. I'll show you some charts to prove that out. Then, right now, to continue the conversation, the dollar is king. That is all that's to it. You can check on any other currency. The dollar is king right now. If it wiggles even a little, the other markets will gyrate wildly. Let me show you some charts to prove that to you. Let me show you some charts why, yes, you should start out thinking for the red side for the S&P, but it might not last the entire day. We will take this one trade at a time. Traders, with no further ado, let's go look at some charts. Traders, the first chart I'm going to show you this evening is the NASDAQ daily bar, and as you can see, it's been in a really nice elevated support zone. Really, this is basically a parallel channel. Stayed in there for quite some time and then fell out of the channel for trading on Monday. Minor support broken. It was tested. It was broken. We've got to at least give that some respect and see where it's going to go. Plus, we've got a red OMNI. Next, you've got the Russell 2000 traders. Look at this Russell chart. Boom, hits here, rallies up, hits here, rallies up for just about another new high, hits the line again, but then takes the line out as of settlement on Monday. Interesting, support being tested. It has been broken, but you know, a one-day settlement below support doesn't mean it's going to stay there. So let's see, but that does not look good right now. It bodes well for the bearish OMNI for Trading Tuesday. Then you've got the emini S&P. Traders, we stayed inside of this bull flag for a long time. 1, 2, 3, 4, 5, 6, 7 days. Finally, we break down out of the flag. Boom, we have this down day. But look, testing time on support. We've come down through support. Now, we know in a big bull market, it could easily turn around and go up tomorrow, right? And be right back up here. But that's not what OMNI's calling for yet. We're starting this off. We're starting off this session by selling the rallies, and we'll see what happens. But you can see we're breaking support in many areas. I am not the only analyst who's noticing this. I assure you the street is seeing this. Dow Jones Transportation Average, take a look at this. Wow. I mean, wow. If this is one of our leaders, I get that it's got oil involved in it, but if this is one of our leaders, you broke that little parallel channel, and look what happened. Wow, we ended up all the way down here on Monday. That is a big dip, I'm sorry to say, but that doesn't look very good. Then we move along. The Dow Jones Industrial Average Daily Bar, still inside the safe zone. How about that one? It's the only one that has not broken down yet, because it went down under the green a little, or the support, but settled up here, inside the support zone. So it is still in the safe zone for now. I don't know it'll be there on, tomorrow morning, but it is there for now. We'll see what happens when it opens 9:30 tomorrow morning. Then, traders, this is what's causing everything. The dollar index, it's not even a massive move. This is my point, how people are so wrapped up in this dollar right now, they're trading it as if the dollar can never have a down day. We closed 43 points lower than the close here from the day before. So open, dropped, closed 43 points lower than that settlement, which is right here. That's the lowest close from settlement the day before to the close the next day. That's the lowest close since this massive day right here. That was on 10/15. Since then, we have not had a single close that was 43 points or more lower than the day before. So the first down day we get, the markets go absolutely berserk. That is because people are very, very concerned if the dollar moves even slightly. You will see that in these next few charts. This is the gold chart, traders. Now, I've been using this chart to show you that Fridays are insanely busy days. That's a Friday. Monday, Tuesday, Wednesday, Thursday. Look at that Friday. Monday, Tuesday, Wednesday, Thursday. Look at that Friday. I mean, Fridays are proven to be insane in gold. So we had this Friday take place. Then we had this last Friday take place. Then the dollar decided to drop 43 points, and I get that there was a referendum in Switzerland, but forget all of that. We're looking at charts, not fundamentals. The chart, look at this gold bar. This is one bar. That's one gold bar. That took place between last night and the end of today, the close of Monday. The dollar was down 43 points. I mean, that is a ridiculous move, but I kid you not, a lot of that is based on the dollar. Look at what silver did. Dollar down 43 points, silver goes up this far. I mean, really? A 250 plus point day in silver? Really? Unbelievable. Even something like wheat, the dollar's down 43, which is unusual for the dollar. Look at how high the wheat goes and settles right there. That, my friends, is telling you this is dollar related. Don't get so nervous unless the dollar really starts to get hammered. I don't think that's going to be the case. There it is, traders. This is what's keeping us in place. Now, if you look at this a little further, you're in a wonderful parallel channel right here. There's nothing wrong with this channel. We can easily call this some kind of an F flag. And you're just gyrating inside the channel, right? Up, down, up, down, up, down, up. Nothing wrong with gyrating inside that channel. When it comes down a little bit, they get nervous. If it stops here, everybody gets happy again. That's what's going on, traders. Don't let a one-day whipsaw or a two-day whipsaw in a big booming bull market like the S&P and NASDAQ get you nervous. Trade the charts as you see them. It'll become a buy again very shortly. Pull your own charts. Do your own homework. I'll see you at livewithoscar.com. So, traders, you've seen the charts, and now you've got my technical argument for why we're starting off with the red OMNI, but we don't know if it'll stay red all day. Certainly starting off with the red unequivocally. We'll see where it goes. Remember, short breather coming our way. Won't last very long because we're in a big booming bull market. If it does last longer than 1 or 2 days, we'll deal with it. Remember that the dollar is king right now, and that's why you're seeing other markets just hiccup around or go crazy, because the dollar had a little bit of movement. Don't let that make you nervous. Traders, you might be wondering why there was no DAX charts today. I'll tell you why. Because if I was a European, I wouldn't be anywhere near the markets tomorrow. You know where I'd be? I'd be watching the Victoria's Secret model show going on. That's where I would be right now. So I don't expect to hear from any of you cats from London tomorrow. Let's see what happens. If any of you show up in my chat room, I'll be questioning your manhood. All right, I'm the X. Listen, I'll see you at livewithoscar.com. Make sure you come on down to my chat room. I am live on camera and microphone. I will be there to help get you through these rough and tumble markets. Make sure you show up. If you don't want to come to the website, at least subscribe on YouTube, because if you subscribe to me on YouTube, you will get a notification via email every time I put out a new video. Traders, once again, I'll see you at livewithoscar.com. Remember, keep your emotions out of trading. One of the best things you can do to help yourselves with keeping yourself at bay, if you can, keeping your emotions at bay, is to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, I will see you at livewithoscar.com. Futures trading is risky and can cause